So I was expecting a reaction from here. There was a higher probability of a retracement from these levels. As you can see, we've got this descending overall pattern with a 1, 2, 3. Just want to cover a setup quickly, which we took on Monday evening, and there was quite a few factors there which were contributing towards the analysis and everything else. Now, we could see that obviously this was stalling, this was in a high value area, and also if we have a look at US oil quickly, we can see that on the weekly time frame, this highlighted box that I have here, this grey highlighted box, is a major liquidity supply zone for this commodity. So what I mean by that is when we saw price retrace into this area, we saw a huge reaction, very impulsive move higher. We saw a retracement back into this level, another reaction. We then peaked at these highs. We broke through very, very impulsively through this level here. And once we had this retracement back into this level again, we saw a further reaction. And we then stalled around $52 per barrel. We then retraced into this area again, had another reaction, and now we're also within this area, and you can see here that we've rejected it, and we're currently reversing out of this major liquidity zone. So when we have a look at this on a daily, we can see here that this whole piece is quite overextended. It's corrected by nature, but it's overextended. There's no denying it's bullish, so we also have to be mindful of that. And with what's going on politically in the world at the moment, this has just further contributed for US oil strength. So I was expecting a reaction from this liquidity zone here, which is around $65 per barrel. You can see here that there has been quite a sharp reaction from this area. But as I was expecting some form of reaction here, I was expecting Canadian dollar weakness. Canada are the world's largest exporter of US oil. So when we see Canadian dollar strength, we usually see US oil strength, vice versa. When we see US oil weakness, we see Canadian dollar weakness as well. So having that in the back of my mind, and obviously with everything that's going on, there is a huge demand for safe haven currencies such as the JPY. And based on the US dollar CAD analysis as well, everything was lining up for a potential sell opportunity on CAD yen. So let's have a quick look at CAD yen. Now this is on the daily, and you can see that we have this pattern. We have a 1, 2, 3 of this pattern, and we can see that price was really stalling around this level, around sort of 84. Now, obviously, upon a third touch of a pattern completion, there's a high probability of some form of reaction. If we have a look at this on 4 hour, you can see that we had 1, 2, 3 peak drives into the high, into this area of high value. And we can all agree that this piece of price action is impulsive by nature. We saw a deceleration and reaction from psychological level of 83. We saw a retracement back into this area of interest, this intraday level here, which is in alignment with the golden pocket. And based on my understanding of US oil, US dollar CAD, and the safe haven demand, if you like, this was an absolute no-brainer. So if we have a look at this on the 1 hour, entry was taken around here for myself. That was where the entry was taken, but then obviously we had a range of sort of a 10-pip range at the bottom of that evening star formation as well. So I just wanted to be safe with how volatile the market has been at the moment and protect our stop loss 29 pips above the structural highs here. That was the most logical thing to do. Now, there's nothing wrong with having a tighter stop loss. For those that want to be more aggressive, but are happy to say take a 1% loss if the market did enter into any kind of volatility state and we did see those upside wicks, then you could essentially double your risk reward. So you could have had a stop loss here, protected above the 78.6. So 14 pip stop loss doubles your risk reward to sort of a 6.7, almost 7% trade. So it really depends on your risk appetite. But for the sake of just remaining in the trade and not being too greedy in these volatile markets, I wanted to be safe, protect the stop loss above structural highs here. And then we could target, the first target was the previous low in alignment with psychological level 83. And then obviously second target per the strategies is the minus 27% extension. So we didn't quite get there, and when we were around this price level here, I sent out a notification to the community just to recommend removing partial profits, so at least 50%. Based on our management strategy, and based on how volatile the markets were. So there's no point in being greedy in these situations. Yes, there was a lot of momentum coming into the markets last night, and there could have been some follow through. There could have been further momentum, further downside for all of these JPY pairs. But as I say, there's no point being greedy. So we've got to stick to our management strategy, stick to the plan at all times, not let the fear and the greed emotions take over. And simply, if we did see that follow through down to the minus 27%, then we obviously would have hit second target, banked full profit, which would have been great. But we still banked sort of 78 pips or almost 80 pips, and almost 3%, which is cool. So there's a nice little trade there. But I just wanted to cover the power of correlation analysis as well there, guys, because once you understand the currency correlations and the influence of commodities, etc., then you can just reinforce trade ideas in alignment with technicals as well. So very, very powerful.